Hey everybody, welcome back. Stock Investor Nick here. Quick update for you on AMD. You probably know Casey and I spent most of 2024 explaining some of the issues at AMD, what needed to happen to support higher stock prices, and of course, none of that happened. But it's a new year. We just got the Q4 earnings results in. Let's talk about if anything has changed. What needs to happen now to support AMD stocks return to actual growth this year? Here are the key points in our presentation today. We'll take a look at the outlook for AMD's AI and accelerator growth this year. And then we'll again be looking at the issues with the profit margins at AMD and what needs to happen in that front. If you're going to be playing second place to NVIDIA, that's totally fine. There's big opportunity there, but you need to have better profit margins. And then last, and certainly not least, is it time to buy AMD stock? In January, we did the update where we said we were warming up to the idea of maybe firing up a dollar cost average on AMD, and we'll provide you an updated look on that. Let's take a quick look at the end market cycles for the semiconductor industry. AMD plays across every single one of these broad segments that we have the industry broken down into. And of course, the one that everybody has been focused on, especially last year, was accelerated computing and AI infrastructure, dominated by, of course, NVIDIA. And there was so much optimism that AMD was going to play a bigger part in this portion of the industry. And you can see that displayed here in this chart from our friends at finchat.io. The bars labeled here in green are the data center segment. This is the quarterly revenue for AMD since the bottom of the bear market in the fourth quarter of 2022. And you can see that really impressive looking growth up and to the right in the green bar in data centers. Thanks to finchat.io for putting this together so quickly. They had these segments and KPIs updated within just a few hours after AMD's Q4 earnings. FinChat, great platform if you're trying to analyze businesses. We have embedded their platform deeply into our process here at Stock Investor. Check out the link below for 15% off a paid plan for yourself. Interesting thing, though, about the data center portion of AMD, all of the attention was on the AI hardware, especially the MI300 series accelerators. But those ended up being just a little over $5 billion in revenue this year generated from the MI300 series. That's just only about 40% of the data center segment. It's still very much a CPU heavy business for AMD, driven by their EPYC processors. And as some of our users have pointed out over on our Semiconductor Insider Discord server, Intel has launched a bit of a price war on those data center CPUs to try to stop their bleeding market share in data center CPU. So too many investors hanging their hat on AMD AI, and it's just a big distraction at this point. Because of this, about 3 months ago, a little over 3 months ago, we had said that we were going to be selling some of our AMD position because the real leaders in the AI and accelerator market are NVIDIA and Broadcom. And of course, Broadcom provides a lot of the IP for Alphabet's TPUs. And then on the embedded segment, that's AMD Xilinx. And actually, Xilinx is where most of our AMD position originally came from. We owned Xilinx for several years before the merger. AMD Embedded competes with Microchip and Lattice Semiconductor. We already have exposure there. So AMD sort of become this duplicate position and playing second place, especially in the AI accelerator market. We did indeed sell some of that position when AMD was nearly 30% higher than where it is as of this recording on the morning of February 5th. Here's a quote from the Q3 earnings call from CEO Lisa Su. We said all year last year that this data center GPU revenue was a big distraction. They did meet this expectation that they provided. They just barely exceeded $5 billion in GPU data center revenue for full year 2024. And these are driven by AMD's MI300 series. MI325 is coming out, and they have moved up the MI350 to about midway through 2025 so that they are in better position to compete with NVIDIA Blackwell. However, it very much seems like this is NVIDIA's market to lose. And at this point, there's no reason to believe NVIDIA is going to cough up much, if any, market share at this point. And here's how we know this. CEO Lisa Su said on the Q4 earnings call that after hitting that $5 billion mark for GPU data center revenue last year, they're looking at strong double-digit percentage growth in 2025 on their way to tens of billions of dollars in annual revenue over the coming years. So NVIDIA is still far and away the fastest growing, most important business in the accelerated computing and AI market. This just doesn't leave a lot of wiggle room for AMD on this front. In our opinion, it's a good reason to invest in the company, but we have to pair that with some other realities about AMD and temper the enthusiasm. Let's get into point number 2. And this has always been the most important thing to focus on at AMD. It's all about the profit margins, not playing second fiddle to NVIDIA. And this was an overlooked positive for AMD on the Q4 earnings update. You can see the revenue segments very much a mixed bag, data center and client computing up, gaming and embedded, aka Xilinx, still down year over year, but overall up 24% year over year revenue. That's an acceleration from the previous quarter. And you can see gross margin both on a GAAP and adjusted non-GAAP basis also still increasing at a healthy rate. There is going to be some bumpiness for AMD though. So sequentially from Q4 to Q1 2025, their outlook implies about a 7% decrease in sales, down to 7.1 billion. However, on a year over year basis, we're still looking at strong growth for AMD. Lisa Su said that included in this seasonality was going to be a slight sequential decrease in the data center business from Q4 to Q1. So again, just if you can, de-emphasize the data center GPU business a bit in your mind. Client and embedded down a little bit more than average. Gaming looks like starting to stabilize for this year. If we project this chart from finchat.io out into Q1 2025, we're going to see that green bar actually make a sequential dip. Overall revenue is going to dip from the December quarter. But what we do expect to see is strong year-over-year improvement in AMD's operating income. Now, especially as segments like the client group, PC and laptop, and gaming start to stabilize, we should start to see more improvement in this operating profit margin in 2025. And this was our beef with AMD all along. No matter how you slice it, if you're looking at operating profit margin, and some of you also want to look at the adjusted metric because of the big Xilinx acquisition that is still providing a bit of an overhang about 3 years later. We prefer to look at free cash flow, which is also an adjusted metric. But no matter how you slice it, these profit margins are just simply too low. But things are starting to look a lot better. So GAAP operating margin was up to 11% in Q4 this last quarter. On an adjusted basis, it was 26%. Free cash flow margin ended up being 9% in full year 2024. Lots of room for improvement. And AMD's outlook for Q1 and for the full year 2025 still imply strong revenue growth. Yes, driven by data center, that's great, but even faster profit growth. And that's really what we need to continue to see. So positive signs here from the Q4 update that the market still seems to be ignoring the hyper focus on the data center GPU business is just really counterproductive here. So let's focus in on this. And our final point is finally time to start buying AMD stock again. Let's take a look at our updated reverse discounted cash flow. Remember, this is not our estimate. A reverse DCF is one scenario that we think the market has baked into the current stock price. Basically, we're trying to figure out what would need to happen to make AMD stock a fair value today. As this is being recorded, $109 per share. So we've updated the blended trailing 12-month GAAP earnings per share and free cash flow per share. That's at $1.24 if you take the two and average them out. And per share profit growth 50% for the next 2 years. That seems like a very high number, but remember, if we're looking at, let's say, 20 to 30% revenue growth in 2025, plus profit margin expansion, and especially free cash flow improvement for AMD, this is actually not that absurd of a number. Terminal growth rate thereafter of 7.5%, which we've left the same from our January update, gets us to a fair value of about $110 per share. So the expectations and hopes for AMD are still high, but just in the last month, and especially the last 3 months when we did the October-November update and called out some more problems at AMD with the profit margins, and the stock was just not a good value, the bar has been significantly lowered since then. Is the stock a buy? We still have a small position in AMD, and if we were going to think about increasing that position size at this point, I would say this is probably something like a decent, maybe not a great, but a decent dollar cost average candidate, maybe buying monthly, quarterly, but adding AMD patiently at this point, because it's still not a cheap stock, even after coming down significantly from all-time highs a year ago, and even just in the last 3 months. The bar is still a bit high, still some pretty elevated expectations for AMD baked into the stock price. And that's not really fair for what a lot of investors were hoping would be this grand AI and accelerated computing win, some sort of close second place player behind NVIDIA. It was just never simply going to happen. But if we help AMD out here and focus back in on just profitable growth, we think we've laid the groundwork for some positive progress for this business and the stock price as a result in 2025 and into 2026. Make sure you check out Semi Insider. Our membership and access to our Discord server gets you all of these show notes, all of our stock research, and a full rundown of our stock investment framework, what we look for when we invest in businesses, and discussion with a great community of long-term minded business owners. Check that out, link below. And of course, finchat.io. We thank them for the help with the charts and visuals in this video. You can also check that out in the links below for 15% off a paid subscription of your own. See everybody again soon here at Stock Investor. Take care. Have a good weekend.